This is the Daily Market Comment by Rafi Boyajian. I'm Maria Pachurdes. Thanks for joining us at XM.com. Friday's payrolls report sent markets into a spin as the U.S. economy added a staggering 517,000 jobs in January, disproving concerns about a worsening slowdown. More crucially, the fact that the labor market is spawning so many jobs at this late stage of the tightening cycle fully backs the higher for longer case for interest rates, while seriously questioning the market bets for rate cuts later this year. But the potential nail in the coffin for Fed pivot hopes came from the ISM non-manufacturing PMI, which also surpassed expectations. The data sparked a sharp repricing in Fed fund futures, pushing the Fed's expected terminal rate back above 5%, while the odds of a rate cut in the second half of 2023 fell significantly. After Powell's mixed signals last week, which fueled the rally on Wall Street, policymakers' comments in the coming days will likely determine whether Friday's sell-off was just a blip or a much-needed reality check. Tech shares, which had been leading the latest advance in equity markets, tumbled the most on Friday as bond yields shot up in the aftermath. With tech valuations already under scrutiny following the January rebound, higher yields could cap further gains if this is only the start for the recovery in yields. Although payrolls surged and the jobless rate ticked lower, wage growth moderated slightly in January, boosting hopes of a soft landing. Gold prices were attempting a recovery on Monday after briefly touching a low of $1,860 per ounce earlier in the session. The revival in yields on the dollar does not bode well for gold's uptrend. But for now, gold is finding support from geopolitical tensions amid renewed frictions between Washington and Beijing after the U.S. shot down a suspected Chinese spy balloon. But there was no safe haven boost for the Japanese yen as the currency slid across the board today on the back of reports that the next governor of the Bank of Japan falls under the same dovish camp as Kuroda. What this means for the yen is that if Deputy Governor Masayoshi Amamiya, who was one of the architects of the Bank of Japan's ever-expanding stimulus program, is appointed the next chief in April, he would not be in any hurry to scale back all the stimulus. The US dollar jumped above the 132 yen level today, while against a basket of currencies, it is at a near 4-week high. This was today's Daily Market Comment. Thanks for joining us at XM.com.